Alright, so this is a new type of video that I'm going to do. I have a lot of written content like articles or notes, but I want to really put them out. So this is how I'm going to do it. On one side of the video, I'll be here. You can see me probably. On the other side of the video, there will be the article or the note that I have written. And I'll explain it in my own words. And of course, in my own voice. So let's look at what today we have. Today I'm going to discuss the deem ownership conundrum. Now, to understand this, you need to know about the preliminary conditions to avail the benefit of depreciation under the Income Tax Act. The preliminary conditions or the preconditions are: you must have the asset, you must be owner of that asset, and that asset must be put to use in the course of business or profession, should be used for the business or the profession. Now, all this comes from two great case laws. One, ICDS Limited, and the ownership part comes from Mysore Minerals. Both of them are great indeed. But today we are going to talk about a different case law, that is Mother Hospital Pvt Ltd. Okay, so when you don't have the ownership, but you still incur some capital expenditure, then you may avail the benefit of depreciation by the explanation 1 to section 32. What does it say? It is called deem ownership for the purpose of claiming depreciation. The explanation 1 tells us where the business or profession of the assessee is carried on in a building not owned by him, but he has a right or a lease to that building. So firstly, it is only in respect of buildings. You must have a right or hold a right of occupancy in the building. And any capital expenditure is incurred by the assessee for the purpose of the business or profession. So the purpose is here clear. Again, you must incur that capital expenditure for your business or profession. There cannot be any other purpose. On the construction of any structure, you create any structure within that building, you will get that benefit. And by way of renovation, extension or improvement to that building. So you can either renovate the building, you can either extend the building, create another floor, or do an improvement like make 2 more rooms, etc. The provisions of this clause, that is depreciation, should apply as if the said structure or work is a building owned by the assessee. So only to the extent the capital expenditure and the improvement is done by the assessee in respect of a building not owned by him, but he holds only the right to occupancy, then such place would be considered as owned by him. It's a deeming provision to give you the benefit of depreciation. Now, we carefully analyze the condition. The business is carried out on a building which is not owned by the assessee, and the assessee holds a lease or a right of occupancy, and the assessee incurs capex on the construction, renovation, extension, improvement of the said building, not merely reimbursement to the owner. Okay, you must read between the lines. We are going to discuss this. You are not reimbursing the owner. If the owner has incurred the expenditure and you are reimbursing them, then it is not considered as your own expenditure, your own capex. You must engage the contractor. You must have the bills in your own name. You must incur that expenditure directly. Send the money to the contractor, buy those materials, etc. You are not reimbursing your owner. Then only the assessee is able to benefit from the deeming provision, else he is not. So now the facts of the case. In case of Mother Hospital Pvt Ltd, the facts were very clear. The assessee was a company, as you can see it's a private limited, was the tenant of a building satisfying condition 1. What is the condition 1? It's a building which is not owned by the assessee. Okay. The accounts of the company have been debited with cost of construction of around 1.37 crores. The account of the firm which owned the building has also been credited by payments to the extent of 1 crore 6 lakh rupees made by the company to the firm for completion of the construction. Okay. So we were reimbursing some of the money to the owner. That is, you can see we have incurred debit to the cost of building and we have credited the owner, and then we have paid the owner through the bank account by debiting the owner and then creating the firm's account, that is the owner's account. So basically the owner has made the expenditure, but then it was reimbursed by the tenant. The assessee company wanted to claim depreciation as the deemed ownership concept, as they should have been the deemed owner because they are satisfying everything. They are incurring cost, not directly but indirectly. They have a right to occupancy, and they are renting a building. They are incurring capex on a building which is not owned by them. So they wanted to claim the deemed ownership. Held, the records show that the construction was made by the firm, not the company. So it's very clear, the law is really clear here, that you must incur the expenditure, not anybody else. It's a different thing that the taxpayer, assessee, has reimbursed the amount, because you have not taken the risk of cost overrun and anything like that. The construction was not carried out by the taxpayer, that is the assessee himself, and therefore explanation would not come to aid the taxpayer. Since it is a carve out, they are not very lenient on a carve out. Usually when a benefit like depreciation is given, they want to force it to you, even if you know depreciation is mandatory. You cannot say, I don't want to claim depreciation on a capital asset. You just have to. But this is a carve out, and in a carve out, the way it is interpreted is not very liberal. It's very literal. Okay. This is quite contrary to the decision under Mysore Minerals, which helps us to understand the concept of beneficial ownership. In Mysore Minerals, what happened was they had constructed the asset and had the complete possession, control and risk. So the beneficial ownership was obvious. However, in Mysore Minerals, there was a delay in the legal formalities like signing of papers and the registry and etc. So the court focused more on beneficial ownership. Are they using that asset or not to their benefit? If yes, then they are the owner in concept of a beneficial ownership. But in Mother Hospital Pvt Ltd case, the assessee has only reimbursed the landlord. There is no construction activity that is carried out by the assessee and no real control over execution also. So you're not really taking the pain of constructing that asset. You're not really taking the problem, the risk, and managing things which are undertaken. Also, you have not engaged the contractor by yourself in your own name. So the court say mere reimbursement would not amount to deemed ownership under explanation 1. A carve out like this is self-contained and conditional and should be read very strictly and with compliance to its preconditions, that is the above. This is quite strange because in some cases, the statutory bodies, I would not say the statutory bodies, but the judiciary has held that such reimbursement, if not made to the landlord, but to the contractor, if the contractor is directly incurring that expenditure, should be considered for the deemed ownership.